What's up, everybody? Good morning to you. It's Wednesday, June 29th, 8:31. We're a minute after the GDP quarter over quarter came in. Let's go ahead and refresh the page and see what's going on here. Oh, it's going to give us the little preview button here. All right, you guys probably already know in the chat because you guys are like that, but I'm sure you've already looked at the numbers. I have not. You can see that we have our little reload. If you haven't looked yet, drop me a little indication. Do you think we're going to beat the forecast, miss the forecast, hit recession, not hit recession? I'm sure, I'm sure some people have already looked, but for those of you who haven't, play nicely with me and just make your guess now. If you have already looked, that's fine. Just sit this one out. I promise we've got more polls for you today. All right, anyways. Today, of course, Wednesday, June 29th, all day we're going to get OPEC meetings that, of course, impacts crude. So we'll take a peek at crude and see if that's seeing any volatility from that. At 6:15, we had Mester speaking. Again, really just an odd timing there. 8:30, we just got this magical GDP. We'll take a peek at that in just a moment. And then at 9 o'clock, as we're still on the stream, Fed Chair Powell will start speaking. So that'll be interesting here. Today's kind of the day jammed-packed with a bunch of stuff. You can also see that Thursday, literally tomorrow, we're going to keep on getting more of it. Core PCE, this is our first sort of look at the inflation numbers, right? 8:30 tomorrow, we'll have some more volatility. So without further ado, looks like everyone in the chat already knows recession is imminent, right? Boom. There we go. Minus 1.6 on the actual read there. So recession's here. Didn't really take a rocket scientist to figure that one out, right? Everyone kind of knew we were on that path, on that trajectory, but the final numbers here, it's confirmed, right? So that's what we've got. How's the market going to, deal with this? Let's go ahead and take a quick peek. There's our sneak peek. I'm just rolling up the window a little bit. You can see it's rolling over, of course, based on that news. Kind of no surprise there, hence the title of this morning's video. All right, that's going to do it for the economic events. We kind of know what's on the remainder of the docket here. 9 o'clock, we'll get Powell speaking. We'll be looking at charts by then, so we'll see what impact that has on the S&Ps. Let's take a quick look at our Cnbc headlines this morning. Bed Bath & Beyond announced earnings before the bell this morning, and they also announced, so hand in hand, that the CEO is leaving, sharply missed the quarterly expectations, just no good there. The chart's not great to trade. They don't really have great options, so it wouldn't be my first indication to sort of trade Bed Bath & Beyond. The other headline that was here just a couple of minutes ago, actually, just kidding. They bumped it off to the right. I apologize. It's right here. Stock futures rise on Wednesday as Wall Street attempts to regain its footing. What a misleading headline. And again, we talk about this all the time here, just kind of for fun on the morning stream. But I mean, if you read that, you'd think, okay, maybe we're opening near the highs of the prior day's session. We're kind of gapping out of range. As we just saw with our little sneak peek when I pull up the window here, we're opening dead on the lows of the prior day's session. Okay, so stock futures are not rising on Wednesday, and Wall Street is not, or at least it's not successfully attempting to regain its footing whatsoever. It looks like the three arrows, capital, fund, right? That actually did have to liquidate. So Bitcoin, boom, more, bearish pressure in the crypto markets. Bitcoin back underneath 20K, right? There you go. That's kind of directly tied to that. Bank of America says Goldman Sachs, that's GS, will have a thriving time during the economic storm that's incoming. Okay, interesting, Bank of America. What else do we have here? Anything good? Anything good? Mortgage demand stalls again, even as interest rates briefly swing to the downside. So that's just an indication that people are probably feeling the constraints of the recession, obviously inflation, tightening up their spending, not necessarily looking out to go and form a new fixed debt or fixed payment, right? So probably makes sense. Not really overly concerned with that. What else do we have here? Fed's Mester backs a 75 basis point hike in July if the conditions remain the same. And seems reasonable to me. I don't see why they wouldn't if inflation continues to sort of spiral like this as it's been doing, right? And the numbers continue to look bad. Then of course, why wouldn't you go with the same sort of, clobber this thing over the head? Again, the market's not going to like that, but you got to deal with this inflation issue. What else do we have underneath? Sell Upstart as rising rates weaken borrowing demand from Morgan Stanley. Yeah, that's kind of been a no-brainer. Stocks making the biggest moves pre-market: GIS, CCL, BBBY, and more. But nonetheless, these are probably the big ones. General Mills, also an earnings candidate. Carnival is at the end of the week. Interesting why that one would be moving early. What else do we have here? Buy Penn National Gaming. So PENN, I believe is the ticker on that one. Penn, literally the name of the thing. As it's going to benefit from pent-up demand for experiences from Barclays. Wouldn't be my first choice. I never was the biggest fan of Penn, the stock that is, especially for like the long term. Maybe I'm just a skeptic or a critic, but it doesn't really strike me as something I'm going to rush out and buy. I have, though, on the other hand, owned Qualcomm for a long, long time. That's dating back to like 2014. And obviously, if they start putting those in the iPhone, sure, that's going to help out earnings. Obviously, that's goes hand in hand. What else do we have? That's kind of it. Here's another recession play, right? Buy McDonald's. Just cheap food. People can always run out and get McDonald's. Get your Big Mac. Get your supersized fry and drink and all that stuff. Personally, not a fan, but I do own the stock. So I would agree with that. McDonald's could be a defensive value play there. All right, that's going to kind of do it for headlines. Kind of nothing out of the ordinary. Everything's sort of aligned with our thinking so far. I do want to just quickly remember from the past couple of streams, we have been seeing some upgrades in tech companies, noting that banks and investment firms are seeing upside now instead of downside. So it seems to be that they've sort of priced in all of the downside so far. I'm not saying that's true or false, but I'm just saying that's what the investment funds have been thinking based on some of the headlines that we've seen over the past couple of streams that we've done. All right. So that's what we've got on our headlines. Let's see what we've got over on the earnings calendar here. Of course, as we know, Bed Bath & Beyond just went. We had General Mills who just went. Paychex, maybe it might make a splash, but it's certainly not going to trade for us. Nothing to do here after the close. I don't see any of those as being good traders. Before the open tomorrow, Walgreens. After the close, Micron. CCL, I thought they were on Friday. Was I mistaken? Was that last week? That might have been last week. That was probably last week. If I had to rewind my memory, I think it was last week. Anyways, all we've got, again, to look at is maybe these two here and then after the close here. So nothing really doing on the earnings calendar. Let's get into the bread and butter of the presentation as we're always doing here. This is our ES futures. And obviously, based on some of those headlines, you would think, again, making a nice little move higher. Absolutely not. We're right back at the prior low of day, and we didn't really do anything in the pre-market. I mean, even this little bit of a rally that we saw here was not much, right? It's from the overnight low and just up to the overnight highs, essentially. A little bit of poke through on the top side, but obviously we're underneath now. It's so funny to me how these headlines are written. Nonetheless, obviously with the recession triggered, lower, right? We're going lower. Let's take a quick peek at our members and do some shout outs here this morning before we dive into the goods here, if you will. Scrolling way up back to the top, who do we have kicking us off? None other than our good friend Philip M. with the emojis. Thanks for brightening up the chat, Philip. After that, we've got Andres Mendez with the blue cash bag. Same deal. Thanks for brightening up the chat. I see that sunshine emoji. We've got Peter Burke, Ryan Speed, Stevie J, Kid Ray, Hawk the Freak, Couch Potato, Justin Jaslow, Random Factor, Dark Lord Peasy. We've got Paul Mayer with the blue cash bag. Good morning, gents. We've got Christopher Parker. Peter Burke says he was buying puts on Disney yesterday. After that, we've got Ty and Jason Lee, both green cash bag supporters. Keaton Rogers, Safitu. We've got Slick Messi. First like. Thank you for that. We've got some sunshine emojis too from Slick. After that, we've got Todd A, Apo, John Martin, Fern, Dat Fam, Dano, Carol, Tri-Trader, Carl Ware, Peter Nowak. We've got Gregory R. Good to see you. We've got Luis, LOL. We've got SC, Apo again. There's Jason Lee with the green cash bag, Karan. We've got Todd A, Fong, J. Cortina, Stephen T, Stevie J, Nick Farrell, Steve Davis and INF, the based homie, and Steve with the sunshine emojis. Thank you for supporting the channel. I see you guys have the green cash bag. Donald Lee's in the building. Sean K, Jake Ryan, Iculus, Coach Cleats, Clint, Fonzie A, Pablo, Pete and Repeat. Great name. Love that one. We've got Thesis. We've got the Sankofa, M. Spears, Ivan. Who else is in the chat here? Johnny Whitaker, Be Savage, Not Average. We've got Alan, JT, Swipe, Coldest Blade, Thomas Invest, Hubert Ronaldo, Antoine, Geary, Atlas, J. Tuno, Mark, Siege, Geary, and that's what we've got. All right. If I missed you on the shout-outs, I'm sure I'll get you next time. Thank you all for being here this morning. I appreciate you coming out to the show. All right, back to the bread and butter. Here we go. This is the ES Futures. This is the analysis. As always, we're asking 3 questions. Number 1, where are we opening in relationship to the prior day's range? Here's the prior day's high. Here's the prior day's low. We're certainly opening right at the prior low of day. It's not a true gap down, but we are opening weak, I would say. Certainly did not get any sort of dead cat bounce, major one at least, off of these lows. So we'll put a down arrow here. Bears kind of firmly in control. Question number 2. Where are we opening in relationship to the overnight range? Here's the overnight high. Here's the overnight low. We are opening smack in the midpoint, so that is a neutral indication. We'll put a tilde for question number 2. Question number 3, last but certainly not least, what is the overnight inventory position? Are they net long? Are they net short? What's the deal there? To do that, you just extrapolate the settlement, aka close, from the prior day's session, and you'll notice we're pretty much right at it. There was an equal amount of time spent above and below here, so that is also balanced. I would say 50-50 net long, net short. Nothing to really read into from that perspective. So, as always, what are the answers to these 3 questions even? What do they mean? Why do we do this? Why are we always sticking to the same routine over and over and over again? Doesn't it get boring? Doesn't it get old? No, it doesn't get boring, doesn't get old, because it's going to indicate to us what we can expect on the open. All right, here we go. So because question number 1 was answered right on the lows, I would say we right off the bat have to carry sort of a bearish slant, right? It's not a true gap down, but we're opening dead on the lows from the prior day's session. If it was going to be more bullish, obviously we would have opened further in range. So question number 1 is telling us bearish. Question number 2, neutral, right? Inside the midpoint of the overnight range. That just simply means that there's not likely going to be a knee-jerk reaction on the bell, right? Also pairing that with question number 1 being inside of range, we're not technically opening on a gap. There's no knee-jerk reaction. The same exact thing sort of comes into play from question number 3. We're opening with a balanced overnight inventory. It's not majorly skewed to one side versus another, longs versus shorts, so we're not expecting shorts having to cover dramatically if we make some sort of rally, and we're not expecting longs to have to close out if we start falling off the side of a cliff. So everything here is really just quite neutral, to be quite frank with you. Again, leaning obviously to the bearish side, but in terms of knee-jerk reactions, we don't have one here on this morning's session. A couple of scenarios I would be watching out for today would be, do we consolidate above the prior low of day or below the prior low of day? That's going to be your judge. It's also the value area low on the prior day's session. The value area was huge from yesterday. Not only was the range massive, like, what was that, 130 points, right? Literally 130 points. The value area was massive as well. 3,900 down to the low of day. 3,820 roughly. So again, just absolutely humongous areas that we're dealing with here. Ranges will be large. So again, just use the prior low of day as a judge. If we start consolidating above, it's a step in the right direction. There might be some sort of breakout and dead cat bounce if we can clear the overnight high. Even at that, I would not shift my tone to being bullish in the ES until we can recapture this level right here. Now, was this level just a magic made-up number? Absolutely not. That marks off the single prints underneath us from last Friday's session. We talked about this incessantly. If it broke, we should expect a move lower. Now, I wasn't expecting something to literally unfold like this all in one day, but it broke, and it went kind of right to target, right? And by target, I mean possibly better illustrated on the SPY daily chart, the top of the gap right here. right? The next short trade is if we just consolidate for a bear flag here. Let's say we consolidate under the prior low of day. You're looking for the gap to fill on the downside. So in the ES, just to stay congruent here, we'll get to the SPY. Don't you worry. I've got you covered there. Don't you worry. But what we'll do here is mark off the gap, right? Because the rest of the gap technically fills down to these highs here. Let's go ahead and make that. Let's actually just duplicate this blue. Oops, we don't want to zoom. Apologies for that crazy looking zoom. We will reactivate here. Come on. Play nicely, Thinkorswim, would you? There we go. Okay. So we'll reactivate that and drop it back down to the gap fill area, which is technically 38.05, okay? So going back over to the current price action, apologies for that little snag, if you will, you can see, boom, there's the filling of the gap. It's really not that far away, right? It's really, really not that far away. So that would be sort of the way I would play this. Anything that does this underneath the prior low of day, look for the gap to fill, and then probably from there be a little bit more neutral. We know we'd be at the bottom edge of the weekly expected move in the S&Ps. Could it continue? Yes, just monitor for continuation with a trailing stop loss, right? Lock in that profit in case we do get a ripper of a dead cat bounce. And then if we do consolidate above the prior low of day, again, probably watching the overnight high to see if we can get some sort of retracement through this area in here. Let's take out the Fibonacci's quickly, just to get a sense for where the bears will remain in control and where the tone will start to shift a little bit more dramatically. So notice this. Almost dead on to the T what we just said about our number, right? Your 38.2 retracement on the prior day session is basically where we had that 38.75 level, right? Also, look at this, guys. You literally can't make this stuff up. Look at how this rejection is right at the 38.2. I mean, obviously, you wouldn't have known this at the time, but resistance pairing with that 38.2 and the measured move from here to here, obviously, just, perfect. The stars aligned. All of the resistance makes sense there. So if there's any sort of rally on today's session, we're remaining bearish as long as we're underneath 38.75, all right? Simple as that on our ES. That's what I've got for you. Those are the couple of scenarios I would personally be watching out for. What we'll do here is we'll run the poll. So I don't know what's going. There we go. I'm going to fire up the poll now. We'll take a quick chat response. So what do you think? What do you think will happen today? Question mark, add option. We'll go 1, we'll go 2, we'll go 3, and then we'll go combo. We'll ask the community. There we go. That's out there. And now we'll actually ask the chat via screen. So if you think that we're going to be bullish on today's session, consolidate above the prior low of day, break the overnight high, and run into that 38.75. Again, we're still bearish in the large picture, but in the short term, right, that would be a bullish move. Drop me a number 1 in the chat. If you're more neutral on the day's session, you think that we're going to chop around and do something like this, maybe we do this, whatever, sideways, drop me a number 2. And then, of course, number 3 is straight lower, filling the gap, getting continuation lower high underneath, continuing on down lower. That's your number 3. You're bearish on the session. Let me know in the chat as well. So 2 ways you can answer. You can either participate in the poll, or you can simply drop a number as a chat comment, and we'll get them both ways, regardless. All right, as that's coming in, I'm going to go ahead and scroll up, see who else we've got in the chat here. Nicholas G, Stevie T, a lot of Steves out there, a lot of Steves. Hey, it's his second day here, and he's loving it. Fantastic, glad to have you on board. We've got Tobias, we've got KKRM7. Appreciate you being here. Let's see what else we've got. Can we go over the importance of having 2 consecutive quarters of missed forecasts on GDP? It's not that the forecasts are missed. It's just that, obviously we're in a recession, right? When you get 2 negative prints and a contraction of the GDP, it signals a recession. You're having economic contraction instead of expansion and growth. That's the importance of that. What else do we have here? Chris Hunt's in the building. Mike's Boat is here as well. So full portfolio on calls from Quadruple Zero. Yeah. Go full port on calls and see what happens. No, that is absolutely not what you should do. That was totally sarcasm there. I hate that I even have to make that as a little bit of a disclaimer, but, it's the world we live in. My journey's here, dropping some cash in the chat, the art of consuming knowledge, and then we've got some responses coming in. All right, cool. Thank you, guys. It looks like we've got 2s and 3s kicked off from Chris Hunt. After that, we've got 2s. 1 from Jay Cortina. We've got 2s and 3s, 2s because of uncertainty tomorrow. 2, 3, 2-3, 2-3. Wow, the consensus seems to be, I would say, a lot of people are thinking 2-3. INF, the based homie with the 1. We've got a 2-1 from Greg. What else do we have here? Ones and twos, 3-1, 3-1, 1.5 expected. What else do we have? 2s and 3s. Okay, so just to sort of, just to give an indication of what the chat might be thinking. Again, I feel like a majority of the people are feeling like we get a 2-3 on today's session. We're either going to go sideways and do nothing or continue the breakdown here. I would say that that could potentially be a scenario, a likely scenario, rather. The rest of the chat would be kind of in the 2-1 camp. There was a lot of mixed results. You know, people feeling like we were going to chop and then find a direction. I feel like that's probably accurate. So 2 first, get a little bit of balance, and then if it's higher or lower, again, I don't entirely know. I would assume kind of we should be thinking about the trend here being lower, and just the absolute devastation from yesterday. But remember, again, it was 130, 120 points. That's a massive range. To just get follow through immediately after that might be a little bit difficult, right? So we'll see. I'm kind of personally in the camp of 2, thinking about scalps on today's session, not overstaying my welcome. Could the moves be really large? Yeah, absolutely. But just based on the location of where we're at, you got to think about, again, we've just seen a 120-ish point move to the downside. 130, excuse me, that's the number. 130 point move to the downside, and we're just going sideways in the pre-market, getting balance here. So I think that, again, balance, and then if it wants to give us a quick scalp to the upside, don't overstay your welcome. We're facing, you're looking into the mouth, eyes directly of a beast, right? And then if it goes lower, maybe you can try that one for a little bit larger of a move, right? So that's what I've got for you in the ES. Those are the numbers I'd be paying attention to. Again, overnight high is your upside gatekeeper, filling of the gap as your downside sort of test at first, right? So something that does this and then a breakdown, yeah, maybe there's something to do there. 38.05. All right. Yeah, Powell speaking at 9 o'clock too, right? So market's just kind of holding its breath here. Let me get this little App Store tag out of the top. All right. That's better. Let's go ahead and get into the sectors now. I appreciate you all tuning in and participating in the poll. I'm going to end that poll just to wrap it up there. And you can go ahead and check out the results. I think it sticks up at the top or something like that. All right. Here we go. XLF. What's going on in financials? What's happening in the pre-market? Just kind of sideways at the prior low of day. Again, all of the same indications that we just discussed in the ES itself, but notice that we're still above the lows of the big breakout bar there. So still some steps in the right direction. There's still the possibility that we could form some sort of higher low in here, but it's not, remember, it's just not as bullish as it could have been. We never got up and over this level on yesterday's session. We were kind of opening right there. There was a little bit of acceptance, and then with the dramatic fall apart, we're back down underneath 32.43. So kind of more neutral to bearish inside of the XLF, to be honest with you, with the break, retest, and failure on this level right here, 32.50. And the reason we're putting that into the universe, I suppose, as a possibility is just because obviously we've opened above. There was the opportunity to accept above, and it clearly rejected, right? So to me, break and retest, looking for lower here in the XLF based on the failure at 32.50. XLE, what's going on in energy? We were talking about how if this moved higher, it wouldn't be a good thing for the market. Notice that it did hold a little bit of relative strength in here. So also with the OPEC meetings going on all day, what's going on in CL? Anything good here yet? Yeah, it's continuing to make a move to the upside. So just keep in mind that this is not helping the cause. This is, this is if you're a bear, that's fine. Again, you're like, good, make energy go higher, make crude more expensive, make the market go lower. That's kind of the correlation here. So as this moves higher, again, no bueno. So to me, it's all making sense, right? We have energy ticked higher, financials failed, and let's see what else we have in the sectors, right? XLP, rollover here. I wonder what GIS is doing pre-market. We're just going to take a peek now because it's obviously the earnings candidate. So boom, move higher, but not really like nothing like too firmly, not like a massive gap up to new all-time highs is what I'm getting at here. So the GIS, sure, it's helping a little bit of upward pressure on the XLP, but it's obviously not enough to get it off these lows. So really nothing to really comment on here, really more neutral, right? It's inside this overall range, kind of in the midpoint. Just doesn't strike me as overly influential on this morning's open. Sure, you could start to say, okay, higher low pullback could be in store. That's a possibility here. But one step at a time, right? Opening at these lows after a big red bar doesn't strike me that we're bottoming out for some sort of higher low reversal just yet. If we print a hammer candle on today's session, that's a different story, right? That's a different story. Over that hammer high, maybe we head back higher, but we just currently don't have that. Opening at the lows of the prior day session, big red-bodied bar, strikes me as, again, continued look for downside. XLY, what's going on in this one? Same idea as what we just discussed in the XLF, but we're using a different metric here. Remember that the first dead cat bounce high was right here at 143.14. We wanted consolidation to remain above, obviously closing back down underneath, neutral to bearish, right? Obviously, we have the possibility here for nothing more than a lower high. If we come in for the equal low reattempt here to here, that should certainly lead to a breakdown, right? So XLY kind of pairing with the idea that the market might want to move lower here off of this failed move to the upside. XLB, what's going on in the builders? Just kidding, it's materials. I know Jay always catches me in the comments for that. But in materials, we never got out of our own way. We couldn't really accept into this cluster up here. We filled the gap and reversed off of it. Again, much more of a neutral to bearish indication. Lightweight sector, not going to spend too much time there. XLI, what's going on in industrials? Boom, sort of still the possibility for some sort of inverted head and shoulders, but this would have to reverse immediately on the open here. And even then, remember, still a really lightweight sector. And this is not a check mark. This is indicating a bounce to here. Maybe the neckline's in play to fill the gap overhead. It's one possible scenario. But again, being such a lightweight sector, this is not going to save the day for the S&P 500. So XLI, not really impressed. XLC, what's going on here? Again, break, retest, failure to hold above. We were opening back above that 56.40, but look at what's happened here. Really, really bad close on the XLC. Not only was it back down underneath 56.40, it was also underneath the breakout point from the 3-day balance here at 55, right? So a lot of damage done in this chart. Clearly just another lower high coming back into the lows. I would expect, again, consolidation, maybe even lower over time. Equal low reattempt after this lower high right here sets up for lower, right? So remember what we were discussing in the prior day's session, right? In yesterday's morning session, the ones who have to prove themselves, the whole point of yesterday's title was, the market needs a breakout for continuation, is that the buyers are the ones who are guilty until proven innocent in the case of a downtrend, right? They're guilty. They need to prove themselves. If they don't prove themselves, then the sellers just take back over. We're in a downtrend and the market continues to the downsides. And currently, prior day's session was a big failure from the buyers. It's as simple as that. Let's go ahead and take a peek at the real estate sector. What's going on here? Not as bad, but certainly getting a rejection off of that 41.53. This was up aggressively in here, so the pullback doesn't strike me as concerning. It's got to hold 40.27 now. Even still, again, lightweight sector, not going to save the day if the market's falling apart and this one decides to rally on a bounce off of 40.25. Next up, healthcare. Okay, so this one looking a little bit better. And also remembering that this is the second heaviest weighted sector in the S&P 500. This is where there's, not terrible, okay implications, kind of a little bit more neutral. Don't get me wrong, really bearish day on the prior day session. Look at the selling activity that took place. There's no arguing with that. But in the grand scheme of this overall move, it's kind of like the first little tidbit of a pullback. So from that perspective, I'm not overly concerned just yet. Let's go ahead and check in on where that 38.2 is. It's right here at 126. As long as we're above 126, even, as we were discussing in yesterday's stream, guys, if we're above 125 in the XLV, I would count this as a reasonable pullback, and we're defending that structure there. So if I go ahead and scrunch up the chart, just to remind you, if you might not be familiar with this, which if you've been tuning in, of course you're familiar, but if you haven't been tuning in, here you go. Here's the bottom of this big monthly balance. That number was 125. It's got to stay above. So we had a look below and fail. Technically speaking, over time, the target should be the top end of the range. I'm not saying we do that over today's session, tomorrow's session, this week, this month, anything like that. I'm just saying from a pattern perspective, that's sort of the next outcome. And remember that this is happening on a monthly time frame, so it might take multiple months to get up to the highs if we get there in the first place. But again, this just goes to reiterate the importance of 125. Anything that sees a pullback there needs to hold to remain in this balance once again. If we fall underneath 125 again, not good. Not good in the XLV. All right, that's what we've got there. XLK, the heaviest weighted sector, perhaps the heaviest of them all. Not perhaps, this is the heaviest of them all, but perhaps the most important rather. What do we have here? So pullback has gone right to the critical level, around 128.40. So we're not quite as bearish as we are in some other sectors, but we're not also quite as bullish as what we are in the XLV, remembering that the XLV equivalent would have been like a pullback to here, right? So overall, This has got to hold up. It's got to hold up at 128.40. It's opening right there on this morning session. So it's as simple as saying, okay, if we're above, a little bit more neutral. If we're below, look for the market to continue lower, right? We have nothing more than a lower high. The buyers have failed to prove themselves. We should be looking for an equal low here, closer to 122.50. That's what I've got in the sectors. And in about 20 seconds here, Jerome Powell will be hopping on the microphone. I wonder if I always do this. I always leave out utilities. Poor utilities get no love. But anyways, in about 15 seconds now, Jerome Powell will be hopping on the mic. So we'll flip on over to the SPY chart, see what we've got there. In utilities, again, strikes me as more similar to energy, honestly. Move higher, a little bit of a reasonable pullback. I could see this continuing if energy continues to bounce as well. All right, Jerome Powell is on the mic. Let's go ahead and flip over to the SPY. Any knee-jerk reactions? I don't know if this is like a conference or a pre-prepared statement that's being released, but nothing so far. It's only been about 15 seconds, but nothing so far in the SPY itself. So let's talk about SPY levels while we're at it here on the daily time frame and the overall sentiment and sort of trade setups for this morning session. All right, so you can see that we're working our way into this downside gap. That's what we were discussing on the ES just a couple of moments ago, right? We basically have this area where if we come in and fill it, that's also fulfilling the bottom edge of the weekly expected move. Usually you expect that, again, the market gets contained within this range about 68% of the time. The market's been getting it horrifically wrong over the past couple of weeks. So could we extend through this? Absolutely. Absolutely. But my first initial thought would be, okay, when we come in and fill the gap, I would look for a reversal out of it. This arrow is a little bit misleading. I'm just saying that we're looking for a bounce. I'm not saying we're going to 385. So again, just to talk about scenarios on the SPY, we just did this on the ES, but maybe the SPY numbers are a little bit more close to home and familiar. Not sure why the pointer's not letting me move this chart around. Kind of frustrating. There we go. So here we go. On the open, again, we're opening so close to the prior low of day that I would be patient here. The overnight inventory is not skewed net long, net short. The overnight is really just balanced and sideways in here, so expect a little bit of more balance on the open. And then if we accept above the prior low of day here, that's a little bit more of a bullish implication. Use your overnight high as a break point. That would be roughly 382 in the SPY. And if that happens, you're looking for roughly 386 is technically the area where the breakdown stemmed from, right? So maybe it's that as your first. Excuse me, I'm totally off on that number. That's not where the breakdown stemmed from. Excuse me. I'm gonna go ahead and grab higher time frame, not higher time frame, but more days, and grab that level. Yeah, it's much closer. 386. Yeah, 386. What am I saying? Second guessing myself. Interesting. I thought it was going to be a little bit higher. Nonetheless, there it is. There's the breakdown point. Let's go ahead and edit that so that we can see that as the blue, same as what we had prior on the ES chart. There we go. There's the number. Okay, so again, break of the overnight high here. If there's going to be any sort of short squeeze, boom, that would be a potential target here. Remember, though, that the market moved a huge range yesterday. Unless we see internals that are searing hot, on the green side, the market's really rallying hard, this might be a bit of a stretch to expect, right? So although that is technically the target, it might not happen, quickly. Remember, I mean, look at the daily chart on the SPY. It could take all day for a bar to print something that does this, okay? That's kind of like on par with an average range that we've seen here in the SPY. Okay, so that's all I'm trying to get at. Be mindful of that in the SPY on your upside. On the downside, again, we're looking for a little bit of balance that fills the gap. That's your first expectation, a little bit of a dead cat bounce. If it forms a lower high inside of this gap or underneath the prior low of day, that's an indication for continuation lower, right? Bears obviously in control. If we get a lower high dead cat bounce off the gap fill, look for lower, okay? So that's what I'm using as gauges here for this morning's open. A little bit neutral in here. Break of the overnight high might get a little exciting for a quick scalp to the upside. I want to be abundantly clear that this is a scalp. You're not overstaying your welcome on the long side. You can trail a stop higher if you've got runners on, but please take profits aggressively on the upside. And then if we get the breakdown, again, fill the gap, probably a little bounce. If it produces a lower high, shorts for continuation lower. If it does not produce a lower high, so let's say we fill the gap, reverse hard out of it, and come back up to the opening print, that would be a long, right? That's a long for something that does this, gap fill reversal. So those are a couple of ideas here for this morning's open. Again, I don't know any better than anyone else which one is going to unfold here, but I do have levels and scenarios in my back pocket to start deploying as the market starts presenting itself to us this morning. That's the SPY. Again, no major fireworks thus far from the J. Powell speech. We'll check back in on the SPY and the ES as we get closer to the 9:30 bell. But for now, we will move along and take a peek at the QQQ. What's going on in the Qs? Excuse me there. I'm going to take a sip of water. 1 second here. Is this guy spamming the chat? All right, artificial intelligence. I would appreciate it if you stopped, if you stopped spamming the chat with the whole Indian market thing. Any more comments that look the same, they're gonna start getting blocked. Okay, so this is a warning. I like to keep the chat open. That way you guys can have free conversation and discuss. But enough's enough. All right, we get it at this point. So artificial intelligence, warning shot across the bow for you. All right, without getting hung up on that, let's go ahead and move into the QQQ, the NASDAQ 100. What do we see here? The major differences are really coming from the daily time frame, all right? So, clear rejection off of the resistance trend line, failure to fill this overhead gap, move all the way to the bottom, filling the downside gap, and closing right on the lower edge of the expected move, okay? All right, artificial intelligence, that's it. We gave you your last chance, and you blew it. So you are going to go in timeout, I suppose. All right. You're in timeout. So back to the QQQ. Resisting at the resistance trend line. Filling the downside gap. Moving right to the bottom edge of the weekly expected move. A lot of relative weakness. Okay. All right. No need to attack him in the chat. All right. No need to attack him. We'll let it be. We'll just move on as a collective. All right. So we filled the gap. We closed at the low edge of the weekly expected move. Obviously, much more relative weakness compared to the SPY. All right. So what we're looking for is, does this want to rally back and retest the upside gap? If so, again, that's an indication for a dead cat in your SPY, but this is clearly acting as the leader. If it just hangs out down here and heads back down towards the overnight low, then obviously you're looking for continued downside and you're not looking for the SPY to get into gear to the upside. So QQQ is going to act as what we called it in the Discord chat. If you know what we called it in the Discord chat yesterday, go ahead and drop that in the chat. All right, we called it something interesting. It has to do with a 5-gallon bucket hat, 5-gallon hat. Yeah. So if you know, you know, and you can drop that in the chat. But anyways, the QQQ is going to act as your leader here. We called it something different. If you know, you know. So QQQ continuing underneath the overnight low, obviously looking for downside. Your next major level is going to be underneath 280.50. Okay, so if we go ahead and what do we want? Is it? Yeah, I suppose the hourly might help here. The hourly might help. I'm just going to quickly expand this, go to an hourly. So here we go on the hourly. Zooming in. I'm trying to illustrate the importance of 380.50. So resistance, 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 support, whoa, support, whoa. Chopped through it, support, whoa, again. So 280.50, really important level here in our QQQ. That would be the downside expectation if we do get a little bit of follow through to the downside, okay? So thank you, hourly chart. You've served your purpose. We're going to go back on down to the 30. And we'll drop it back down to 2 days. That's good. All right. So QQQ, again, the same idea. Anything that really fails and moves lower, that's going to be a terrible implication for the SPY. This is going to act as your leader. We called it the cowboy. Okay, we called it the cowboy in the Discord. The QQQ is your cowboy. Watch the Qs. If we do get into this overhead gap and start, accepting in there, a little bit more of a bullish tone for the S&P markets. All right. So that's the Qs. By the way, I think we're hitting record viewership here. If you haven't hit the thumbs up button already, I don't know what's going on today. Maybe the algo is just favoring us this morning, but good numbers. Hit the thumbs up if you haven't already. I would appreciate it. But nonetheless, thank you to all the new viewers. If you're a new viewer just tuning in, appreciate you being here. You should come out more often. Anyways, that's the QQQ and how it relates to the SPY. Okay, we talked about this acting as a leader as well. Next up, we've got IWM Russell 2000 and the small cap. So what's going on in small cap land? Taking a quick peek here, filled the upside gap, reversed hard out of it, and we're still inside of the expected range, okay? So zooming back in a little bit further, what we want to watch for here is, does this want to fill the downside gap? It was so small that I didn't really put it on there for the weekly watch list video, but technically speaking, there's a little gap in here from 170.90 down to 170.21. If the market's going to remain bearish, this should probably come in and fill the gap, and from there, If it reverses out of it, that's where you would say, okay, does the SPY have any reason to bounce at these levels? Okay, so that's your relative strength sort of indication here in IWM. Cool. All right, that's kind of it in the IWM. I would say for upside, your breakout levels, again, the overnight high, but look at how that pairs nicely with a little bit of support and resistance from the afternoon consolidation from yesterday. That's roughly 173.25. If we're above that, that's where you start looking for, okay, can we retest 175 here, which was clearly a break, retest, and rejection, right? So that's the upside if it wants to unfold that way in the first place. But currently, again, just kind of at these lows, I think patience is the play. Break of the pre-market high might get us there, and then anything to the downside, start eyeballing this gap down below in the small caps. That has been the broad market, 910 on the money. Let's do a quick run through our core list of companies, see what's going on here, and then we'll recap the broad market right before the 9:30 bell, and we'll send you on your way. All right, so in Apple, you can clearly see, again, a rejection here for a lower high. Filled the gap, closed right back closer to this 137. So I would use 137 as your number. All right, 137 is the number in Apple. If we're above 137, there's no reason to press the bet to the short side any longer. Expect a little bit of a dead cat bounce, maybe to retest this area here, 138.50s. If we break down underneath 137, yeah, maybe we see a continued flush into the 2-day lows from around in here, which would have been closer to, let's go ahead and grab that inside bar set up, 134, okay? And again, that might be a little bit of a stretch, especially after the range that we saw in the prior day's session. But again, opening up the door for lower underneath 137, use that as your pivot here. Upside, we talked about back tests here of 138.50s. If we reject from that, there could also be a short trade at this area, right? That could be a short trade as well if we get there and start printing anything that looks like a double top, anything that looks like an inverted head and shoulders, or regular head and shoulders, excuse me. I meant to say inverted hammer, right? Short under the lows, looking for lower after that. All right. That's what we've got in Apple. Let's continue along. Netflix, what's going on here? What's going on in Netflix? Zooming in on this one. Much more bearish, right? Closing back down underneath 183, especially after the hammer candle that we discussed explicitly in yesterday's live stream. Remember that the first support off of this, that struck me as incredibly bullish, excuse me. This bounce instead of lows right there, that looked really good. The fact that we couldn't continue up and over those highs, again, speaks to the lack of follow-through, the lack of strength from the buyers in this market. The sellers are just clearly continuing to exhibit full control here. So the failure to hold 183 strikes me as bearish. Anything that comes up and retests it, look for lower, look for rejections at that level. And then, of course, anything that just consolidates out neutral, look for, opening range breakdowns, bear flags, flush points, descending triangles, the usual suspects for entries for lower. But I would say that the chart is positioned in a bearish manner. Next up, we've got Tesla. What's going on in Tesla? Taking a quick peek here. Looks like we're coming into that 700, opening underneath on a little bit more firm of a true gap down, okay? So Tesla will have gap rules in play. Because we had such an expansion of range on the prior day's session, I would be looking for this gap to fill a little bit more. The one concern I have is that we're not opening closer to the overnight lows. Remember this with our gap rules always. When we're opening closer to the overnight lows, your risk reward is better, right? Your risk is underneath that level for a stop out. Your entry is up and over, could be the first 1 minute high, could be a failure, then retrace back through the opening print, something like that. You can obviously see how the risk reward is much more favorable if we were opening lower, but currently opening kind of in the midpoint of the overnight session, I still do think that it might want to come up and tag that 700 and correct some of that inventory, but overall that trade might be a little bit harder to pull off. So the trade that you would look for, again, is not the long here, but rather the rejection on the gap fill off of 700 for lower, right? A clear lower high and just rejection there continues momentum to the downside. So that's Tesla. Next up, we've got AMD. What's going on in AMDizzle? That's what we've been calling it, just to make things a little bit more fun. Bear flag, that's kind of all I see here. The pure rejection back down underneath 85, right back down into these lows, gapping down this morning. Again, really, really nasty stuff. This one, I would say, is a much cleaner opportunity to trade for the gap rules and the gap fill. You'll notice that we are opening right at the overnight lows, so stop loss could go right under that level. Long back up through the open to close the gap here. Again, it's a really quick and tight trade. The range is not impressive to be trading for, but the risk reward makes sense there. So that's what we've got inside of AMD. And if we accept further into the prior day's range, that's fine. I wouldn't really look for a new long once that happens unless we breach this level right here, which is 81.75. Taking out 81.75, look left, obviously thin structure to retrace. Could, again, that's a really large range. I'm not saying we get back up to 85, but there's nothing really stopping this falling knife on the downside in there. All right, so that would be my upside watch up towards 85. That's AMD. Downside look, obviously, is a gap fill reversal rollover, looking for a short. Right? The one concern, obviously, is that we've gone wall to wall, from top all the way down to bottom of this balance range in here. Usually speaking, it's tough on a 100% retracement without a dead cat bounce first to just get continuation underneath 80. Could it happen? Maybe, but it feels a little bit chasey at this point in time. Next up, we've got Meta. What's going on with Meta? This is FB, old FB, Zuckerberg, of course. This one still strikes me as a possibility for a really sloppy and cruddy looking inverted head and shoulders. Obviously, there's a lot of work to be done before that turns into a bullish trade up and over the neckline, but it's still possible, especially with this little bit of a rally, a little bit more impressive here in Meta compared to almost everything else that we've seen so far. So again, I like the fact that it's starting to hold that 160. Let's see how much and how, if it can in the first place, hold this acceptance inside the prior day's range. So that would be my main watch here inside of Meta. Do we accept and continue to accept in the prior day's range, or do we just immediately fall back down towards the lows and start moving lower after that? If we start getting acceptance in here, this might be a place to start looking for decent longs to retrace some of this thin structure. It would require a 15 or 5-minute pattern, but currently this one exhibiting the best relative strength on our list this morning. Next up, we've got NVIDIA. What's going on in NVIDIA? Is it like AMD? A little bit more bullish than AMD, just in the sense that this is kind of still producing a small upward channel. We are opening on a gap down, so gap rules are in place. Again, if you're bullish, you could watch for, okay, if we fill the gap and then accept into the prior range, looking for the higher low. If you're bearish, you want to see the gap fill and reverse off of it or not fill the gap at all. So that's NVIDIA. 160 is your number inside of NVIDIA. 160, just like Facebook. Facebook was, yeah, well, I keep saying Facebook, but Meta, you guys know the drill. Anyways, that's NVIDIA. Use this as your pivot. Fill the gap, reverse, bearish, fill the gap, accept within, bullish. I would say your next breakout trade could be up and over 162. 162 would be that next number here inside of NVIDIA. So something that does this has me on the lookout for the trade, and then a break of that retraces some of this thin structure, right? That's if it reverses in the first place. Obviously, momentum is clearly to the downside. Continuing along, Softy. What's going on in Softy? This one filled the downside gap, right? So that is a bearish implication, the fact that we got no love on the reversal out of it. Look at this even on the 30-minute sessions intraday. Look at the back tests of the gap fill, right? Acted as resistance. That is incredibly nuanced. Again, I love how efficient the markets are. 259.50, 259.40, that's your number. As long as we're below that, neutral to bearish. If we're above it, there's a breakout to be had back through this gap right here. Thin structure as we filled it. Notice that we supported above and rejected below. So that remains to be thin structure through the gap. It's not quite as thin as literally having an open gap in the chart, but there's not a whole lot that's going to stop the market as an if it moves there in the first place. So that's what I would watch on the upside inside of Microsoft. Downside, you're just looking for continuation. So anything that hangs out down here does whatever, sets up a flush point underneath that. It's actually above that level. It's basically yesterday's low of day, 256.40. Anything that breaks that after consolidation, look for lower. Anything that sort of just breaks it immediately, look for lower highs and continuation underneath, right? That's how you kind of trade that level. Next up, we've got Amazon, last but not least, the mini beast, and we've got 9:17 on the clock, doing great on time. What do we have inside of Amazon? Currently, opening inside the prior day's range, not on a true gap down, and it is underneath and kind of in this range right here, underneath that 109 level is what I was getting at. So overall, bearish, right? As long as we're underneath this in here, bearish, same idea as what we just discussed inside of Microsoft. If we crack 109 to the upside, bullish, right? Looking for a retracement through some of this here. 112 would be that next target. Or it could be a higher low pullback above, something that does this, right? Anything that's in here, again, we talked about as bearish. 107 could be your flush point to the downside for continuation. Let's see if we can find a target on a higher time frame. Let's go back to that hourly chart that we just fired up a second ago to see if we can find, oops, we want to go to favorites. Let's try to find another target here to the downside in Amazon. I'm thinking it's here. Yeah, 105, 106. 106 is probably the level I would watch. 106. So about a $1 breakdown. It doesn't really leave a whole lot to be desired on the downside, to be quite frank with you. But 106 is kind of that next area of support. So we'll see. We'll see. Amazon might be a little bit tricky to play to the downside just based on the size of this bar and the distance that we've traveled so far. All right, that's what we've got in the core list of companies. That's it. That's going to do it for the core list of companies. Let's go ahead and recap the ES, see if anything major has changed. We've got 9:20 on the clock. And it looks like, if we quickly go on over to the SPY, that Jerome Powell's saving the day, right? The market's bullish. It's going back up to 400. No, not quite. Sure, we have a little bit of a green bar forming, but it hasn't really changed the tone of the overnight session. We still have the overnight high in place, the overnight low in place, perhaps better illustrated on the full screen ES here. Zooming in. Again, your overnight high has not been breached. We're coming for it, don't get me wrong, but it hasn't been breached, so it doesn't change the tone. Same with the overnight low. Currently opening closer to the overnight high than the midpoint of the overnight range, so I suppose that's a little bit more of a bullish implication right off the bat. So now, just to sort of recap some scenarios that you would want to watch for here on the open, anything that consolidates above the prior low of day, but underneath the overnight high, puts in an opening range, and a break there, again, is bullish to look for a quick scalp into this range. We're not expecting the market to go all the way to 38.75. That would be a bit of a stretch here. But, you know, that's kind of where we're looking for the market to go, higher if we breach the overnight high. Again, use a trailing stop loss and definitely take profits aggressively if you see the market starting to stall out, especially if it coincides with any of these prior rejection points in here, namely our 38.55 area. I'm just going to, roughly round up 38.55. If we get into that, that would be a good first place to start taking a trim. All right, and that's a decent trade there, guys. That's 38.40 up to 38.55, 15 points on an ES contract. Really nice trade. Really nice trade. All right. So that's what we've got in the ES as a quick recap. So consolidation, breakouts over the overnight high, scalps only to the upside, take profits aggressively. I want to be abundantly clear about that. We're not saying that the market's going back to 4,000. We're just saying that there might be quick scalps to the upside. If we break back down underneath the prior low of day, look for the remainder of the gap to be filled down to 38.05. Reassess for a dead cat if it produces a lower high, equal low here, that sets up the breakdown, right? So those are the two scenarios that I will be watching for on the opening bell this morning as we come into 9:30. That's what I've got for you in the ES. All right, I'll quickly fire up the scanner, see if anything interesting is happening there. Otherwise, we'll interact with the chat, see what everyone else wants to look at, and we'll go from there. So high volume pre-market scan, that looks like it's not the correct list, so sometimes you just got to refresh it here in Thinkorswim. I guess that's it. Not a whole lot hitting the high volume scanner. NEO, we'll just quickly take a peek. Gapping down in the pre-market. Interesting given the relative strength that it's had up here. We're actually gapping way down to fill this downside gap. So that's actually kind of interesting here. Could be a knee-jerk reaction back to the upside as an if shorts have to cover based on this overnight low not being secure, right? Not being secure. What else? LI is probably the same. Upstart, remember that this got a massive downgrade. So again, big gap down. Gap rules will be in play. We're kind of opening right at this area of support. So I would say if we can get back above 32, there might be a reason to look for the gap to fill overhead. That would be a trade only. This is not an investment. This is a trade, a scalp only to the upside inside of Upstart. Upside inside of Upstart. MA, anything interesting here? Nothing in the pre-market. Shopify pre-market, bearish. Looks like the split kind of happened the other day. Taking a closer look. Yeah, the split happened the other day. It looks like, I wonder why there's two. It's saying there are two 10-for-1 splits. I don't know what the deal is with that. Nonetheless, really reasonable price point now. Kind of takes the fun out of the options, noting that these are just not going to be as pumped up with premium. So, I'm not sure if it'll sort of make some people lose interest and just won't be as lucrative to trade. Well, I know they won't be as lucrative to trade, but the premiums just won't be there, right? You'll have to take a large amount of size to make it worth your time. That's it. After that, we're underneath 500,000 in pre-market volume, so we'll just kind of hang out with the chat. What do you guys want to look at here? So I'm going to scroll up a little bit, see what else we've got here. Who else? Did we check out Amazon? FedChe, we just did. Hopefully you didn't miss it. Hopefully you sticked with us. John C. Wow, I remember when we had less than 200 viewers. The memories. Yeah, looks like we're, something about the algo this morning really picked us up, so that's cool. Malibu, appreciate the tweets. Yeah, definitely. Who else do we have in here? USA is indebted to every public debt dollar used around the world. You are owed gold and silver. All right, just kind of looks like a spam comment. If QQQ is the cowboy, then what's SPY? Batman? I don't know. Ooh, look at this. Interesting little push lower here in shop pre-market. I wonder if the ES is doing anything either. Nope, just kind of coming in a little bit. Make yourself known as intelligent. Push the thumbs up button. Yes. Don't hit the thumbs up and push it. That's much more intelligent. The horse. Yeah, it's the horse. The cowboy and the horse. Absolutely. Who else do we have? Anything for TA? We covered NVIDIA. Not a new viewer. We talked about Meta. Can we look at PLTR? Yeah, we can look at PLTR briefly. We've got 9:24 on the clock, so coming up on 6 minutes till the bell. PLTR is building a new budding uptrend here on the daily time frame, which is actually quite promising given the current market environment. So we do have a new higher high, so we can afford a higher low pullback. The question is really, where's the pullback going to find that higher low if it finds a higher low? Now, in an ideal world, I would kind of want this 9 area to hold up as support just because it's about 50% of the way through this, and you really don't want to see more than a 50% retracement on any given move. It's kind of a tough look. The fact that this retraced 100% and then moved higher is really impressive to me in PLTR. Usually after a 100% retracement here, you wouldn't really, obviously have an equal low instead of a higher low, so it would be more difficult to get trend continuation. So I do think that this is kind of impressive in building a new budding uptrend here. I would want to see 9 hold, and we're kind of opening right at and around it on this morning's session. I don't really think that there's anything to do here from a trading perspective. The ranges here are just so small. It doesn't really make sense to be trading for 10 cents on PLTR when Apple moves $1 at least every day. Tesla moves, anywhere between $10 and $50 a day, depending on the volatility. I don't really see PLTR as that attractive as an option to trade, but, for just, from an analysis perspective, yeah, new budding uptrend 9 kind of has to hold here. So hopefully that answers some quick questions. Again, for small ranges that are literally 10-cent increments, I don't really see the use in breaking down scalps on that. Can we check in on Alibaba? Yeah, we can do that. BABA. This one fell off of our radar a long time ago, just as it got, basically untradeable with all the gaps. It was in a horrific downtrend. It is perking up. I'll give it that. I'll give credit where credit is due. Opening on a gap down, though, this morning, a majority of the gap has already started to fill. I would not look for this as a gap fill trade. Instead, I would watch for the gap fill reversal. So the trade short off the retest of these lows around 116.50. If we fail there and roll back over, again, that's kind of your indication for a short setup inside of Alibaba, probably coming back down into these levels down below, closer to 113.50. All right, that's Alibaba. Can we take a look at gold? GLD. Yep, we can take a look at gold. Now we've got about 3 minutes until the bell, so just be mindful of that. The bell will be ringing here shortly. We're going to probably check in on the ES one last time. Gold gapping up, obviously, with the whole recession deal. Yeah, gold makes sense that gold is kind of gapping up. Gold's a heartbreaker trade. Look at this box of wickedness. It was bullish. It looked like it was going to break out. Gap down, rolled over. Looked like it was going to break down. Moved back higher, back in the midpoint of the range, right? So overall, personally, I've had horrendous luck trading the metals. Maybe I just don't know what I'm looking at. Maybe I'm not using the right type of analysis for metals, but it's just not working out for me in the metals charts. So sure, it is opening on a gap up. I would just say if it pulls back and holds 170.25, that's a bullish implication. That's a gap fill reversal here. If it fails, just more neutral. Wouldn't really want to touch gold. That's that. What else do we have here? Let's see. Johnny Whitaker with Oxy. Yeah, we'll take a quick look at Oxy. We know that energy space is gapping up this morning. Crude is moving higher. Watch out at the pump. Gas prices might be on the run back up after the little reprieve. Yeah, not opening on a gap up this morning in Oxy, but certainly bullish here. Pre-market indications probably say wait and be patient. We have a pretty, nasty, I don't want to say nasty, but large ranged indecision bar right at the 50 SMA. So I think that this could use some digestion of the move higher. A sideways inside bar wouldn't strike me as unreasonable, and then maybe a breakout into the future, and then we'll reassess after that. So I'd watch for an inside bar on Oxy on today's session. What else do we have? Mo is asking for ERX. I don't know what ERX is. Probably a penny stock? No, it's not a penny stock. ERX, weird ticker name. Energy. Okay, we covered energy, so no need to rehash it on a leveraged ETF. Yeah, knifeables. Gas prices better not go back up. Yeah. Well, unfortunately, it's a global market. It's subject to so many different, things pushing and pulling on gas prices that it's pretty tough to, just easily say, okay, we should do this and gas prices will go lower. It's a complex market that I am not an expert in. I'm not going to pretend to be one. I just know that there are a lot of moving parts. All right, with that being said, we've got about 45 seconds until the bell. Jason Aaron's asking about QCOM. We'll take a quick peek and then probably wrap the stream up at that. So that's the last request here. QCOM, there we go. Opening inside the prior day's range. This is very similar to Oxy. The range yesterday is so large and we're opening in the midpoint. I would expect an inside consolidation day. I would watch out for the inside bar. I wouldn't really be overly aggressive up or downside just based on the massive range we had here. This big explosion on the Apple news, I'm sure. And then the pullback, just being so middled, I wouldn't want to get overly directional. Watch for an inside bar and then maybe we have a setup for the future here, either higher or lower. Here's the bell in 10 seconds. I guess we'll just watch it unfold here on the ES. As you know, my first thoughts here are patience on the open. So I'm going to be watching, and we'll just quickly watch the first minute here. What happens? Prior low of day, does it hold? Does it not? So here we go. Let's see what we've got. In the first minute worth of trade. Hey, ATJ Trades is in the building. Nice to see you. I know you hang out in the Discord sometimes, so good to see another fellow trader out there. In the first minute of trade, we're just going sideways. We're about 20 seconds in, a little bit of lift. Again, this is pretty tough action to just do something immediately on the bell. So we're being patient. The more times, this is a quick takeaway you can have if you want to walk away with a little tidbit of information. The more times you trade back and forth through the open in the first 5-10 minutes of the day, the more indecisive the day should be, the more balanced the day should be. So we've already traded back and forth through the open a number of times. This candle has gone red. The candle has gone green. So it's just really indecisive, right? There's no clear and firm footing just yet on what the opening sort of direction will be. All right, there's the first minute. 9:31's on the clock. We're not doing anything impressive. No knee-jerk reactions just yet. Just to reiterate to you guys what my stance is here. I'm watching for balance in this area. If we break the overnight high, we're accepting in the prior day's range. We're looking for bullish scalps to the upside. If we fail the prior low of day here, and look at this, see, we're already sucking back up, more indecision. If we fail the prior low of day and produce a lower high, looking for shorts underneath this area here for some downside. That's truly going to wrap it up. Join the Discord if you're not in there already. It's completely free to join. It's where we hang out, send trade ideas. I hope to see you in there, and I also wish you all a green trading day.